It's Sunday evening, September 26th. I'm doing my market analysis. I'm taking a look to see if I can find some trades, so I thought I'd do a video. Let's see what we can find. I'm going to try and keep this very short. Right now, the most important thing is the market. We've seen more sustained selling in the last 2 weeks than we've seen in many months. That tells me that the market could go either way, and we need to be very careful with our swing trades. In fact, on a swing trading basis, overnights is about all I would suggest doing right now. I still feel the market could go either way. Before we take a look at that, let's take a look at Friday's pick. SNAP was my pick of the day. Beautiful gap through this horizontal resistance, not a gap actually. It just flew right through it on Friday. Put up the 5-minute chart. You can see this nice big rally. Video came out right about in here, but the stock was able to continue to grind higher. Big volume. I think that SNAP is in nice shape to perform Monday as well. But it can be pretty choppy. You can see no real pace, no real direction in here. As soon as the stock tries to break out, pulls back. Tries to break out, pulls back. We need to be careful with this one. We need to make sure that this rally is the real deal. I suspect that it is, just for one reason. You've got this long green candle closing on its high. Now, if you had profit takers wanting to smack it right back down again, they would have done that right in here Thursday, but they didn't. In fact, all of these gains were preserved on Thursday. Friday, stock opens and does not give anything back, just a little bit in here, and then motors through to a new closing high. I like that. I like this doji here. I like the follow through on Friday. I believe this is a legitimate breakout. I also think that you might try an out of the money bullish put spread keying off of that $78 level. You could go a little bit further out of the money to give yourself a little bit more distance. Again, we really don't want to do any long-term swing trades right now. We don't have a lot of major economic news this week. We got GDP coming out, durable goods orders, ISM manufacturing on Friday, but the really big economic releases are still a week and a half, 2 weeks away. So those won't really come into play. The Evergrande situation in China is behind us temporarily. The coupon payment was made. There could be more problems in China right now. You've heard me mention FXI. Why is their market down so much if these credit concerns are done and over with? I think there's a rat. I don't like the price action I've seen in China, but we also had the FOMC statement come out. Tapering is on the docket. They're talking about starting that perhaps as early as January. We might hear more about it in the FOMC statement in November. We also have the FOMC minutes coming out in a few weeks, so we'll get an idea of where the Fed officials stand. If I take a look at the market right now, here's why I think it could go either way. Persistent selling that lasted for 2 weeks. We dropped to the 100-day moving average. That is a major technical support that hasn't been tested in a year. We have previously tested the 50-day moving average. That's as far as the selling pressure has gotten, and then whoosh, off to the races. This decline is also more orderly and more sustained than we've seen in the past. Couple day dip, gone. Couple day dip, gone. Couple day dip, gone. This is more steady selling pressure. We have this nice upward sloping trend line right here. It could be breached to the downside. If it's breached to the downside, a couple scenarios can play out. One is it continues to go down and it breaches that 100-day moving average. That would trap a lot of bounce buyers and they would get flushed out and we'd see a pretty heavy wave of selling. Another scenario that could play out is a dip and a higher low double bottom, and then a nice rally from that level. Asset managers are not going to be gambling. They want to see that support. So they are going to be waiting. They're going to be very patient. Just as a side note, the forward PE on the S&P 500 has not been this high since the tech bubble in 2000. So valuations are stretched. Where do you go with your money? 0% interest rates. Yields not even keeping pace with inflation. That means that if you're in bonds, you're generating negative real returns. Well, that's the bullish argument, and that's the reason that stocks have rallied so much. That's the reason that the market has continued to push higher. So you have opposing forces. Opposing forces mean there are reasons to sell, there are reasons to buy. Uncertainty means that we have to keep our trades very, very close to the vest, and we don't want to be out there with longer term trades until we know which way the market is going. So right now, we're going to have a nice little breakout. The S&P futures are up 6 points right now. You can see how we've been able to inch higher here. We're above the 50-day moving average. We've closed above the 50-day moving average. That 50-day moving average is your guide. If we close below it, pair your risk on the long side. If we close higher on Monday, this downward sloping trend line will come into play and we will be above it. And there's a chance for follow through for the next few days. That is why I'm going to look on the bullish side right now, but be super careful. Trim your size, distance yourself from the action by selling out of the money bullish put spreads. Keep your trades in very, very tight right now until we have a clear direction. I am day trading primarily. I don't have a lot of overnight swing exposure. That's how I'm playing it currently. I'm just going to go into a very easy search. It's called Pop Bull. It's my favorite swing trading search. I must like a stock on a swing trading basis, on a longer term basis, before I day trade it or before I even consider an overnight swing trade. That's why I'm going to use that search. You can see there aren't too many results, so it should be pretty easy for us to knock through this. Before I do that, know that I would prefer to buy stocks that are super strong versus stocks that have been selling off and that are bouncing off of a low. I don't like those setups as much because those sellers can return at any time. Aehr on the list. Beautiful strength, incredible strength through this horizontal resistance. Earnings after the close Thursday night. Friday, the stock gaps higher, closes near its high of the day on massive volume. Like that setup. That's a really nice, strong stock. Definitely one that I'm going to be watching come Monday morning. GOEV. Look at that steady buying, accelerating into the close. There's your price movement there. Is this a short squeeze? It could be. Stock has been selling off. It is above the major moving averages. Good day trading candidate. Don't know that I'm going to be swinging it like this horizontal breakout here, like the fact that it closed above the 100-day moving average. 100-day moving average is about halfway up this long green candle. That needs to be preserved. But I do like it. I'll day trade that one. Looking for strength. Not going to touch that one. May day trade it. SOFI, another bottom fisher in here, getting through horizontal resistance. Highlighted it back in here a couple days ago. Still like it, but for very short-term traders. UAL, bottom fisher. TSLA, nice upward sloping trend line. Longer term. Stock getting through horizontal resistance, challenging longer term resistance and closing above it. Bullish engulfing candle right here. So yes, Tesla actually sets up pretty well. If I'm going to be an aggressive trader on Monday, here are some things that I need to have. I need to have the S&P futures up. 6 points higher right now is what it's indicated overnight. I want to see that preserved. I also want to see the market continue to grind higher. I'd like to see the S&P 500 above that downward sloping trend line that we have on a D1 basis. If I get those things, I'm going to be pretty confident that we've been able to close above the 50-day moving average. We're closing above that downward sloping trend line. I've got a little bit of traction come Monday. I don't have a lot of economic news or anything that's going to spoil the rally. We've got the FOMC behind us. We've got the Chinese coupon payment behind us. All I'm looking for is just a couple of days of positive price movement out of the market. That's all I want. So on a stock like Tesla, I'm going to be looking at this breakout right in here, which comes into play around 760 on Tesla. So I'd be looking to sell an out of the money bullish put spread on it using weekly options that expire on October 1st. So bring that up, take a look at it. The October 60.55 bullish put spread is something I would consider. You can see that currently that spread is 40 cents bid, offered at 120. I need to get at least $1 for that to take that position. It's a $5 wide spread. I bring in $1. I have to put up $4 in margin for it. $1 credit divided by 4 of risk gives me a 25% return in a week. That's a decent risk reward ratio. You can see how the red dotted line is one standard deviation move. So I also have that working in my favor, but mainly on Tesla. Here's why I like it, and here's what I'm looking for. I want to make sure that that support level is intact. That is half of the long green candle right in there. That is also that closing high. So we need to be through horizontal resistance. We need to preserve that halfway point on that long green candle. If either of these two fail and the stock loses its relative strength come Monday, we need to exit the trade. It's a very short-term trade. All we want is for the stock to be nice and stable and tick, tick, ticking higher so that the premiums come out of that spread and so that we can buy it back. We sell it for $1. If I can buy it back for 50 cents, I'd be happy with that. That's a nice little return. It's a fairly conservative play right now because I don't know which way the market is going to go. So that's what I'd be looking at for this particular trade. We'll put up the 10 SI indicator and orange line above zero. You can see that it's got strength relative to the market, heavy volume. That's how I would play it. I think some of these others also look good. In particular, I like that AEHR. That is a stock that I'm going to be watching Monday. That is a stock I am likely to day trade. Please leave your comments, subscribe to the YouTube channel. You never know when I'm going to do a video. Decided to do one on a Sunday night. If you're subscribed and you got your notifications on, you're going to know to find these trades. Watch Tesla tomorrow. Watch AEHR. If you like this, please give it a thumbs up. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.